Shares of Coinbase are on fire right now, up 250% in the past year and 85% in just the past month. So what in the world is going on with this company? One of the things I focus on here on asymmetric investing is the disruption that could potentially take place on the blockchain and Coinbase's involvement in that. So the non-trading revenue. But today I want to focus on that trading side of the business because a lot has changed over the past week or so on the trading side, and we could see continued growth. This is actually where a ton of Coinbase's revenue and cash flow comes from. If you go back to 2021, the company was extremely profitable, generating a ton of cash. It was actually that trading business that was driving that. So we know at least a few metrics behind this, and we can kind of peek into what might happen in the fourth quarter. So that's what I'm gonna dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at Coinbase's traditional trading volume and where those trends are headed recently. This is Coinbase's third quarter 2024 earnings report. And the number that I want to focus on here is trading volume on the exchange and look at the trends over the past year or so. So we go back to the third quarter of 2023, $76 billion in volume for the entire quarter. So that means less than $1 billion per day trading on the Coinbase exchange. Go to the third quarter of 2024, 185, divide that by 90 days in a quarter, you get just over $2 billion in trading volume per day on the platform. This is volatile over time. It's been a little bit higher in Q1 and then fallen a little bit the last couple of quarters, but this is the general trend. What this then does is it ultimately makes its way to trading revenue. And these are trailing 12-month numbers. I'll show the quarterly numbers here in just a second, but you can see that December 2021, so that would be the full year 2021 revenue, $6.8 billion in trading over the past year, less than half of that, about $3 billion in trading revenue. Here's the quarterly chart, and you can see that $1 billion in first quarter revenue, that was when that trading volume was much higher. In the most recent quarter, $2 billion in daily volume, that was about $600 million in revenue for the quarter in trading alone. That is important because look at this number right here. This is from CoinMarketCap, and they publish this on a rolling basis. So you can go to this any time of the day, and it will give you an updated number on what the trading volume is for each of these exchanges. Now, Coinbase's market share has changed over time, but it's typically in the top 3 or 4 exchanges globally. Binance is almost always number 1. But look at this volume number. It's not 2 billion like we saw last quarter. Over $8 billion in volume over the past 24 hours. So if the trends from earlier this year hold in the revenue per volume and this $8 billion level on an ongoing basis, which may not hold, it may fall down to 1 or 2 billion later in the quarter. But right now, trading volume is on the rise. So it's very possible that Coinbase will generate well over $1 billion, potentially well over $2 billion in revenue from trading in the fourth quarter alone. This is one of the reasons that the stock is up so much. And if you remember, going back to 2021, Coinbase generated $4 billion in cash from operations and a very similar number in free cash flow in 2021 when trading was that high. This is a much more efficient business today, much lower headcount than they had back then. So very possible that we get back to those higher cash flow numbers. And on top of that, Coinbase is not just a trading business anymore. This is a business that actually over the last couple of years has been driven by non-trading revenue, stable coins, custody, staking, all those other things that Coinbase has been building in the background. The infrastructure is what I call it. And those revenue sources continue to rise as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at those non-trading revenue sources. You can see that $1.8 billion in revenue over the past 12 months. That will likely rise because we have seen an increase in the market cap of the USDC token. That is where the majority of the stablecoin revenue comes from. As interest rates rise, at least long term, and the market cap of the USDC increases, that will increase the amount of revenue that's coming from that token. So the non-trading revenue is growing. We may have a surge in trading revenue in the fourth quarter. This is why investors are so excited about Coinbase today. Now, that excitement may fade because we saw that in 2021. There was a peak in trading late in 2021, and then things started to fall off in 2022. That could very well happen. There has been a huge surge in election-related trading so far in November, but it's also very possible that that continues. And I think we're in a much different position today than we were in 2021. There's much more infrastructure. There's much more institutional money behind cryptocurrencies. There are real companies and real policy changes that may be made as well. So if there's real policy changes that are made over the next 6 to 12 months, that could bring another flow of trading and revenue onto the Coinbase platform. And that's really what the company is building. It's not just about trading. It's not just about stable coins. It's about all of these things. It's about building the entire platform that Web3, as we used to call it, whatever you want to call the blockchain development, that's what you're betting on with Coinbase. And that's where I think there is long-term growth. This is a company that I was buying back when it was in the $60 per share range. And I continue to be bullish on the future of the company because I think the blockchain can be so disruptive. We heard recently that BlackRock wants to tokenize everything from stock trading to bond trading. They've done some tests on that with Coinbase. And if those kind of things move forward, we're talking about trillions of dollars in trading that are going to move their way to the blockchain. Coinbase will likely be involved in that, whether that's through the Base blockchain, through the wallets that they have, through the other infrastructure that they're building. So I think there's a lot of tailwinds behind Coinbase. And this is just the latest piece that is going to provide a short-term tailwind is this trading number, because if that provides hundreds of millions or billions of dollars worth of revenue and cash flow, that's going to give Coinbase more fuel to build this business long term. And I think that's ultimately where the upside is. But a lot of unknowns for Coinbase, but I think what we're seeing is there is a real upside in the trading increase that has happened over the last few weeks. If it sustains throughout the fourth quarter, which is an if, but right now it's growing. It's on the uptrend. I've been looking at these numbers over the past few days. It was $6 billion a couple days ago, and then it was $7 billion. Now it's up over $8 billion in trading per day. If that continues, this could be a phenomenal quarter for Coinbase. And don't sleep on this being a very, very disruptive company over the next decade in finance as more and more transactions move to the blockchain. So hopefully that context was helpful with where Coinbase is today. Let me know what you think of Coinbase stock. Has it gotten too expensive for you? It's something I think about, but right now we're looking at a company that's trading for 13 times sales, and that's not including the recent growth that you have in stable coins and on the exchange business. So I think could be much cheaper than we think right now looking forward. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.